First way to play the great outdoors, you can do the obvious, stick with Brunswick, which we just spoke to on Friday, so we know the numbers are fresh. The number one boat maker just reported a blowout quarter, true blowout, last Thursday, but its stock barely budged in response till today. I've got some lift, $3 a change. Story here is refreshingly simple. Even after expanding its production capacity, Brunswick has so much demand that they can't come close to making enough boats and engines. Folks told us that they could take years before they merely build their inventories back up to normal levels. Think 2023 or 2024, there's a big waiting list for boats. Till then, we got a boat shortage. And when there's a shortage, well, prices go higher. 2 years ago, Brunswick also bought a little company called Freedom Boat Club, which is basically a nationwide co-op for boats. Rather than buying one yourself, you can join the club, pay your membership dues, and gain access to a whole fleet along with your fellow members. I think it's a great idea. I used it when I was in Florida. It's no wonder Brunswick keeps buying up Freedom Boat Club franchises like the ones in Chicago and New York City. But at the end of the day, this one's all about the math. While the stock made a new all-time high today, it simply doesn't reflect the incredible numbers we saw last week. Remember, Brunswick raised the midpoint of its full-year earnings forecast from $6.20 way up to $7.45, when the analysts were only looking for $6.44. On top of that, management said they could earn $8.25 to $8.75 in 2022. So what does that mean? This high-quality outdoor activity stock sells for less than 13 times next year's numbers. I find that ridiculously cheap. Plus, when you look at Brunswick's track record, they've beaten the earnings estimates by an average of 58% over the past 4 quarters, meaning there's a good chance the actual results will end up surprising to the upside again, which would make this stock look even cheaper in retrospect. In short, Brunswick's a screaming buy because it's a secular grower now, not that cyclical thing that so many people lost money on in the old days. What if you prefer to stay on dry land? Okay, the second way to play the great outdoors here is RVs. 2 weeks ago, we got an update from Lippert, the RV, marine, and auto parts supplier, formerly known as LCI Industries, when they pre-announced a first-quarter revenue bonanza. So we know they're doing great, but Lippert reports in full results tomorrow. And given that the stock's rallied more than $10 since the pre-announcement, there's always a chance it will sell off, even on a good quarter. And that's been the pattern for most manufacturers. Very picky earnings season. But Lippert sells, again, for just 15 times next year's earnings estimates, solid 2% yield. So if the stock sells off tomorrow, you might want to dig deeper into the quarter and use that weakness as a buying opportunity if you like what you see. But then there are the actual RV and motorhome makers. Thor, remember Thor, Bob Martin? We have them all the time. Winnebago, we've had them on. These stocks both swooned late last year when they were written off as lockdown-era relics. But they're really both in the same position as Brunswick, aren't they? They moved so much merchandise last spring and summer that the supplies are incredibly tight. That's allowing them to make a fortune in this environment. Thor and Winnebago delivered a pair of huge earnings beats back in March. Although the initial roaring in this response, both stocks have pulled back. Now, this is craziness. Thor is at 14 times earnings. Winnebago at 11 times earnings. Thor gets that higher multiple because it's best of breed, but they both work here.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.